Hi, everyone. So, welcome to the live stream today as we continue with our discussion for the November 2025 examination. Now, in case you've missed previous sessions where we are solving questions, you can check the podcast session on our YouTube channel or also check the playlist on our YouTube channel because all of these videos are available on the channel so you can watch, then you can prepare well for the examination and most importantly, pass the exam. So welcome to the session today. I see some of you guys coming up. If there are any questions, you know what to do. Drop them in the comment section or the chat box for me. I'm going to be answering all your questions as much as possible. And also, make sure you give us a thumbs up on the video and also subscribe to the channel in case you have not, because all that helps us to reach as many students as possible as we proceed with our discussion and help a lot of people to prepare for the examination and most importantly, pass their exam. So today we are still on management accounting and we want to solve some questions on management accounting. And last week, that is on Wednesday, just this week, Wednesday, we started with a question one area, saw the calculation of the ROI, RI, and some various issues like EVA as well, that is economic value added tax. Economic value added, not economic value added tax, economic value added. So what we want to do today is to take another question and share our thoughts on some of the other things that we need to understand. So let me bring up my screen quickly and then let's get excited into the discussion for the day. Remember that our enrollment is still ongoing for the November 2025 examination, and so you can still register, join our sessions, get access to our lecture videos, and also join our executive reaching masterclass for the examination so you get the guided assistance that you need in order for you to pass the examination. Also, we have our books available that you can get copies of: public sector, financial reporting, audit, strategic case study, corporate reporting, taxation, management accounting, financial management. All right, so let's continue. I guess got a little glitch with my internet here, this country, and the internet issue, which they are supposed to be working on, but no, they would rather be doing some other things that you can't even think about in the country. But let's continue. I think I'm up now. Other streams have stopped. So Ken, share a link on share a link on, let's say, the other platform, let's see. Because only YouTube it's on. Yeah. All right. Okay, so let's go into the discussion real quick. Let's see what we can do in the next few minutes. So we are going into July Management Accounting, July 2025, question number 4. As I mentioned, question number 4 now in the Management Accounting examination, ICAG, is dedicated to public sector issues, which is the role of the management accountant in the public sector. And so that is a key segment of the syllabus that you must know about as you get into the exam hall. Now, as I say always, it is important you have an understanding of what the examiner is going to be getting goosebumps on in the exam hall. So question 1 is going to be on performance measurement. That's question 1. And in that question 1 performance measurement area, the examiner has options to ask you questions about the organizational performance measurement. Organizational performance measurement. Let me do this quickly, then we move. The whole organizational performance measurement. That's the first thing there. Now, under this whole organizational performance measurement, the examiner can ask us to use the balance scorecard. The examiner can ask us to use the balance scorecard to analyze the performance. You know the balance scorecard where, according to Kaplan and Norton, we are having a holistic organizational appraisal looking at both the profitability, which is financial perspective, customer satisfaction, which is customer perspective, efficiency and effectiveness of the internal controls, which is internal control and business processes perspective, then innovation and development perspective. So we could use the balance scorecard, or the examiner can just ask us to use financial ratios to analyze the performance of the organization as a whole. So that is option number 1 available to the examiner. Option number 2 in the question 1 area is the concept of divisionalization, where the examiner is just focusing on divisional performance measurement. So the examiner is focusing on divisional performance measurement. Now, this is where you are using things such as residual income, like we did in the previous session, residual income, return on investment, and then economic value added, EVA, to evaluate the efficiency and effectiveness, and even in some cases pay bonuses to the various management within the organization or to the various divisional heads of the organization. So that is the second thing that we need to understand there in that question 1 area. The third thing is still under divisionalization, but this time around we are talking about the concept of transfer pricing. Okay, the concept of transfer pricing. So in that question 1 area, these are the 3 key things. For your information, the examiner has brought all of them, almost all of them, in the last 3 examination dates under this new syllabus. And so as you are going into the exam hall for November 2025, you don't have an option to say, hey, okay, I'm going to focus on this. You don't have an option to focus on anything. You must know everything under that question 1 area that the examiner will get goosebumps on. Now, certainly it's going to be a mixture of written questions as well as calculation questions. That's the swag that the examiner is going to be going for. So that has been the idea for question 1, performance measurement. These are the 3 options available to the examiner and what exactly we can do in respect of that. Question 2 has been dedicated over the last 3 examination dates to theories, usually. And so this is where you find a number of theories. So the entire 20 marks area is dedicated to written aspects. You know, in management accounting, there are a lot of theories. And so this is where you're going to be seeing those models of evaluation in your syllabus. Something like total quality management, issues such as the business process reengineering, value chain analysis, just-in-time system. Those things are theory areas the examiner will throw at you. Then sometimes you could see variance analysis theories coming up here. You could see sometimes even budgeting questions, theories coming up here. So the question 2 will be dedicated usually on theories that you have to be mindful of. Very sweet, simple, straight to the point. Then we come to question number 3. Question number 3 has been on and off, but we're going to be having, and from this angle, I'm going to soup it up a little bit. So sometimes we are having the examiner bringing in something in respect of variance analysis, okay, or budgeting in some examination dates there coming up. Then question number 4 has been the public sector issues all the time. right? Then question number 5 has been the short-term decision areas that we need to understand, like relevant cost analysis, limiting factor analysis, throughput accounting ratio, shutdown, make or buy. All those short-term decision issues will be buried in the question 5. So it tells you that in the exam hall, you're going to be having everything in the syllabus coming in. So there is nothing like, oh, in management accounting, if you focus on this area now, you can pass the exam. There is no area of focus. The questions are going to be spreading across the entire syllabus, with each segment having the allocated grading or weighting based on the syllabus structure examined. And that is what you need to understand. So on the Wednesday session, you saw us discussing the issue in respect of performance measurement. And so today what we want to do is to go to question number 4 and deal with some issues in that public sector environment. And that is where we are going into the July 2024 and looking at the issue in respect of this question 4 here. So let's see what we have here in the A aspect of the question 4. As the management accountant for NHIA, I determine the minimum number of attendees required for the authority to at least cover its cost. Now, I need you to pay attention carefully because you are in management accounting. So when you read the requirements of the question, your principles must click very well to enable you to accurately provide an answer to the question. Read that again. It says, determine the minimum number of attendees required for the authority to at least cover its cost. Okay, so if we are looking at what the entity can sell, what the entity can do, to how much revenue the entity can generate and everything to be able to cover its cost, what does that mean? It means you are calculating the break-even point number of attendees, so break-even point in units. Because the break-even point is the point at which your total cost is the same as your total revenue. So the I aspect of the question there is asking us to calculate the break-even point in units. And you know the idea about break-even point that in units, that it is going to be your fixed cost divided by contribution per unit. We'll get into that in a moment. So that 10 marks area there is break-even point in units. Oh, but I'm in public sector. Yeah. But the principle you apply is the break-even point, break-even principle, marginal costing principle, because of the context. Because under public sector, management accountants are needed, and that is one of the decisions. Look at the II part of the question. It says, compute the fee per attendee for the NHI not to run at a loss if the number of attendees reaches maximum capacity. Okay. So what does that mean? It means in the II part of the question, you're going to calculate revenue at a certain maximum capacity. Then you can divide that by that maximum capacity. Then you can get the revenue that they will get per attendee. So let's go back up and put the pieces together here. The National Health Insurance Authority, NHIA, has, through the government of Ghana, GOG, received a grant from an international development partner to implement certain projects. Consequently, the authority is required to build the capacity of its staff and other stakeholders within its value chain to ensure the smooth execution of activities associated with the project implementation. Okay. The authority has organized capacity building workshops to further its intent of building the competence of its staff and stakeholders. However, the condition attached to the grant explicitly prohibits expending any part of the grant amount on capacity building. As a result, the authority has to find a way of funding the workshops, but must not make a net loss in that endeavor. Final paragraph. So the first paragraph, yeah, the examiner is telling you some love stories there. Second paragraph, yeah, still building you the love story there, telling you the reason why we are doing what we are doing or what we are about to do, if I can put it that way. In order not to make a loss, the authority intends to charge concessionary fee of 165 Ghana cedi per attendee per week. Stay with me. They would charge 165 Ghana cedi per attendee per week. So that is like the selling price per unit. Selling price per attendee. Okay. Per week. The workshop will last for 2 weeks. Ooh. And it is expected that the fee charged will suffice for all related expenses. Okay. So let's begin the journey then. Associated cost of organizing the workshops are, okay. So we see food and drink, hire of venue, facilitators fee. I need you to stay with me carefully here. Remember the I aspect of the question said, determine the minimum number of attendees required for the authority to at least cover its cost. And we said that is break-even point in unit. That's the concept we're going to be using to answer that question. And so it is fixed cost divided by contribution per unit. And so food and drink, they said 45 Ghana cedi per attendee per week. Okay. Hire of the venue has a capacity of 560. That is 525 per week. Facilitators fee, 5 in total, 675 per week per facilitator. Okay, let's begin the journey. The last paragraph. Facilitators have agreed to waive their fees. Oh, okay. So it means now we'll be left with 3 of them. Each facilitator will also facilitate for 1 week of the project, of the workshop. Also, workshop attendees are required to be given an information pack that is expected to cost 130 per pack. Then, as well, the authority is expected to incur general cost of 150,000 in organizing the workshop. We are done reading. So the question we ask ourselves is, of the information provided here and the cost items provided here, which of the cost items are fixed? Which of the cost items are variable? Because we need that so we can answer the question. So let's begin the journey here. NHIA. We are looking at the I part of the question, which says minimum number of attendees required to break even. Today my internet is really messing me up. But let's see if I can still go. So we need our fixed cost and we need a breakdown of the things. So let's bring up our fixed cost. So if we go back to the question, we are told that the entity will incur a general cost of 15,000 to organize the workshop. That general cost is a fixed cost. So we bring that up. General cost. 15,000. What else is going to be fixed? The facilitators. The money we are paying them will be a fixed cost because it's a standard thing that they are just taking. So the facilitators, remember 2 of them have waived the amounts due, so we are going to just take 3 of them. And it is 675 per week. So 3 times 675. So 3 times 675. And that is 2025. That's an interesting figure. So the 3 of them per week there. Okay. Give me a sec. I want to see how long is the workshop. Were we told? Okay. Then we can work on the weekly basis and go away. So general costs to be incurred on the workshop. I thought we read somewhere about how long the workshop is going to take. Give me a sec. Let me see. As a result of net loss. In order to make the authority to charge for attendees per week, the workshop will last. Yeah, the workshop will last for 2 weeks and expected that the cost will suffice all. Okay. Okay. Then the high of the venue, that's also a fixed cost. Venue, Nhyira. That is how much? 525 per week. So 525 times how many? 2, because we are dealing with 2 weeks. So 525 times 2, and that is 1050. Give me a sec about the facilitators quickly, because it says 675 per week per facilitators. And they said 2 of the facilitators have, each facilitator will only facilitate for 1 week of the workshop. Okay, so they wouldn't come 2 weeks. So we will do 1 week. Now, the reason I was being careful was because it means that each facilitator it will do the facilitation for 1 week. And so we wouldn't have to multiply the facilitators' money by 2, because they are not going to do the 2 weeks continuously. Each of them will do 1 week. So we'll break it down on 1 week there, like that. So the general cost, the facilitators, each of them will facilitate for a week, not the 2 weeks continuously. Context of the question every time. High of the venue, very important. So those are the fixed costs. The food and drinks will definitely come under variable costs there. Then the information pack to be given will also come under variable cost. So let's see. Because that will depend on the people who will come, plus 2025, plus 1050, and that is 1875. So that's total fixed cost, 18,075. Why is this a fixed cost? Because these costs will be incurred regardless of the number of people who come for the workshop, regardless of the number of attendees. Okay, that's why these are going to be fixed cost. So total fixed cost. That's the idea there. Let's continue with the discussion. Then we need a variable cost. First, food and drink. Food and drinks. How much did they say? 45 Ghana cedi per attendee per week. And they are going to be there for 2 weeks. So, 45 per attendee for 2 weeks. And that will be 90 Ghana cedis. So, the food and drink will depend on the number of attendees, as we mentioned. Then the last one is the information pack that we will give to them. Okay, information pack. They said 30 cedis. So that will give us the total variable cost per attendee. And that will be 120 cedis. So we have our total cost. We have total variable cost. You know what we will need? contribution per attendee. So contribution per attendee will be the sales. If you check, they said we will charge everyone $165 per week. So the 2 weeks will be what? Let's see if I can bring this up a little bit. So 165 times 2 minus the variable cost of 120. Okay? So 165 by 2, that's 330 Ghana cedi for the fees per attendee, which is the selling price, minus 120, the variable cost per attendee, that will give us 210. So once we have the contribution per attendee, we can now answer the I aspect of the question, which is the number of attendees to at least cover the cost. So number of attendees to cover the cost will be the total fixed cost, 18 and 75, divided by the contribution per unit, 120. So how many people must attend the workshop so that we can break even? 18 and 75, 120, and that is going to be, relax. So 330 minus 120 is 210, not 120 again. So 210. So 1875, 210, 86 people. So if we get 86 attendees, then the agency can cover all the costs that it is incurring to organize the workshop. Remember, the impulse of this question, because you are the management accountant, remember they said, hey, this workshop, they cannot make a loss. They cannot make a loss. So at least let's break even. So if at least we have to break even, then how many people must attend the workshop to break even? That is 86 people. And that is the I aspect of the question for 10 marks. So you see that really, it's not that difficult, right? If you, if you have an understanding of how decision-making works in management accounting. Let's go to the next one, II. It says, compute the fee per attendee for NHIA not to run at a loss if the number of attendees reaches maximum capacity. Okay. So the question the examiner is asking us here is, what should be the sales revenue if all the people come? So that once we get a sales revenue, we can divide that by the number of attendees generally. So if the maximum, what's the maximum capacity? The maximum capacity here for the venue they are hiring or they are taking is 560. Okay, so what do? Let's go. Fee per attendee. So fee per attendee at maximum capacity. Remember the fee per attendee at maximum capacity so that they wouldn't run at a loss. Okay, so if we don't want them to run at a loss, then the question is, what is the total cost at the maximum capacity? Once we get a total cost at the maximum capacity, then we can divided by the number, and that will give us what? The fee. So total cost at maximum capacity. You know this already. Our fixed cost remains the same. So we bring in our fixed cost, 18 and 75. Then we bring in the total variable cost. Remember, variable cost per unit remains the same irrespective of the output level. So 120 per person times the number of people coming in at maximum capacity, 560. So we multiply that up, 120 by 560, that's 67,200. So the total cost at the maximum capacity plus 18 and 75 will be 85,275. Again, the question said, sister, compute the fee per attendee for the NHIA not to run at a loss. So if they don't have to run at a loss, then at the maximum capacity, the total cost must be equal to what? The total revenue. So at the maximum capacity, what is the total cost? That is what we just calculated. 85,275. So if we want them to break even, what should be the fee? And that is the answer to the question. So fee per attendee will be the total cost, 85,275, divided by 560 attendees. Right? So my answer divided by 560, boom. They can charge them somewhere around 152 Ghana cedis, maybe 0.30. So if they are able to get 560 people, then they can charge each person 125 Ghana cedis, 30 pesos, and that will help them to break even. Why is this decision important? Because if you check earlier, they said, hey, they wanted to charge 165. And at that 165, they needed 86 people to come to be able to break even. The I aspect of the question, 86 people. But the venue covers 560. How do you take a venue that is having a capacity of 560 people and sell tickets to just 56 people? Then you are underutilizing the venue. So if you want to get all the 560, then how much should you charge? So instead of the original 165, they are concessionary pricing. Now they have to charge just 152.30. Then they can break even at that level. This is the answer to the question for 15 marks. Very easy, right? 15 marks. So 1.8 times 15, that's 27 minutes. So doing this in 27 minutes, I think it's fair. The only challenge here is if you don't understand that, yes, although you are in public sector, it's a decision, short-term decision that the entity is making. So you have to apply your marginal costing principles because you are the management accountant for the agency. So your rule is your rule. The law is the law. To apply it, then you're going to be toasted. And that's the beauty of management accounting. So whether we are in the public sector or in the private sector, short-term decisions, we are going to be applying the marginal costing principle. And that is what you are seeing at play in this question here. So that is slide 1 there for us. And then certainly the second slide, slide 2. So for 15 marks, this was what the examiner asked us to look at here. Then there is a theory 5 marks there that the examiner threw in for you. It says, outline 4 challenges associated with carrying out CBA in the public sector. That is cost benefit analysis. It's one of the methods used to appraise projects in the public sector. And so the examiner is asking you to produce 4 challenges. And I'm going to go through that with you in the marking scheme. But let's read a story. The distribution of limited economic resources among competing policy objectives is an inherent difficulty in public sector investment. Cost-benefit analysis, CBA, is an economic evaluation method used to compare the costs and advantages of different techniques. Cost-benefit analysis is a valuable tool for making decisions and helps in the organizing, evaluation, and control of capital and ongoing projects. However, there have been persistent challenges associated with conducting CBA analysis in the public sector. So for 5 marks, the examiner is asking you, give me some challenges. I'm going to go straight up just into the marking scheme, and then we go through the points provided there. Here. So number 1, departments and agencies not carrying out CBA for investment projects as required according to the rules relating to scale of investment. That's one of the things. 2, underestimation of cost. Now, because you are looking at the cost and the benefit, sometimes judgment is going to be coming in, and so sometimes costs are going to be incurred. And it's one of the characteristics in the public sector where you see a lot of cost overruns. So they say, oh, government had budgeted to spend X amount of money on a road somewhere, on a project somewhere, on a hospital somewhere. But by the time they finish, the project has ballooned to X amount of money. And you see this a lot in the public sector, allegedly. When you start allegedly with the bank square built by the Bank of Ghana, initially the project had a certain estimate. By the time it finishes, the estimate is out of proportion. Then the hole that has been dug in the middle of Accra, the National Cathedral fiasco, the same thing. It started at, oh, we're going to spend X amount of money. It is not done. We just have a swimming pool there, a hole in the middle of Accra, but we've spent upwards of $80 million allegedly with other pending court cases available. And so in the public sector project appraisal, that's one of the challenges. Because sometimes the cost will be underestimated, and maybe sometimes that is done dubiously to get the project going, because they know once the project gets going, government will find a way to finish it, whether the cost goes up or not. So that's one of the limitations if we use the cost-benefit analysis to appraise a project. Lack of sufficient options, analyzing including no definition of the counterfactual. Lack of clarity over specific objective for the project. That's also another thing. So for instance, the National Cathedral issue, for instance, it's a public sector project, right? Because it was started as a private thing, then it transitioned into the government's project. What's the benefit of the National Cathedral? It's difficult. Yeah, people said, oh, we are building national emolument. It will become a tourist site. We'll have biblical museum, Garden of Eden. Can it be? They've gone to Israel to carry stone and things allegedly that they're going to use there. So you look at the costs we are incurring as a nation, not as a private project again, but as a nation, and you analyze what really is the benefit of the National Cathedral project. And that is one of the limitations if we use cost-benefit analysis to appraise a project. Because, yeah, we can reliably estimate the cost to some extent, but what exactly is the benefit again? That's an issue. That's an issue. Then, double counting of benefits. Yes. Again, because of people are emotional about some of these things, they are going to double down. Hey, Charlie, if we build this, it can become a tourist site. People will no longer have to travel to Israel again, they will travel to Ghana. And I'm like, really? You think there is any significant Christian heritage about Ghana that people will substitute Israel for Ghana? But, that's the thing that happens in the public sector. If we are rationalizing projects by looking at benefits and the cost we are incurring, there will be double counting of benefits because people get too emotional and they begin to bring in sentiments that doesn't make sense in some cases. Then certainly insufficient sensitivity analysis. That's one of the things. Because in project appraisal, one of the things is sensitivity analysis, which has to be built into the system. The idea about sensitivity analysis is simply what will happen to the net present value, or if you want the net benefit of the project, if the variables used in arriving at analyzing the project changes. So for instance, we said we will spend, let's say, $10 million on a project. What will happen if by the time we start the project cost is now $12 million? That's sensitivity analysis. But under the cost-benefit analysis approach, there is insufficient sensitivity analysis built into the system because the data doesn't really permit us to do that as much as possible. And these are some of the benefits we must understand when we talk about project appraisal in the public sector using the cost-benefit analysis. And that's the answer to the question 4 of July 2025 ICAG past question. Very sweet, simple, straight to the point. So that's what you must understand there when it comes to this. And definitely that is what you need to look out for. So I'm going to wrap up around here today. And God willing, Monday we'll meet again to continue with our discussion, hoping that we wouldn't have network issues, unfortunately, today as we started. Hoping that we're going to have a smooth transition next week, Monday, as we continue with the discussion. So thanks very much for joining us on the stream. And remember to stay connected. Subscribe to the channel if you have not. Put us on post notification. That way, when I go live, you will be able to get access to the notification and join the stream. Or when we post a new video, you'll be the first person to be notified so that you can get access to the content and, most importantly, pass the examination. Have a great weekend, and I'll see you on Monday as we continue with our discussion. Stay safe.